2025 technical and fundamental analysis of Broadcom. Let's analyze it together. But before that, read the disclaimer right here in the video description below. Completely insane upturn, I gotta tell you guys. And actually, we're gonna draw some lines right here, right now. And there is a clear support level between February 2024 and then the latest month was like April 2025. So this support level has been strong, and also we have some resistance levels right here. We're gonna draw them. Remember that we have to, touch the key levels of each area. In terms of resistance, we have to go to the new highs, and then in terms of support levels, we have to go to the lows. So right here, we are just in the middle of this trend, which is an uptrend, but it's like some sort of a megaphone. And the thing right here is like the net income. It's gonna explain possible scenarios, but we're just gonna read some news about the company. The first one that we have right here, we're talking about the reporting. A strong start in 2025. You can clearly see the stock that is rebounding right now after the drop that we saw at the beginning. But the first quarter revenue was rising 25% year over year to a record nearly 15 billion, and driven by surging demand for AI semiconductor solutions and infrastructure software. So the company's AI revenue jumped 77% to 4.1 billion. And Broadcom projects right now continued momentum with the second quarter 2025 and revenue guidance of nearly 15 billion again, and robust growth in both AI and enterprise software. So analysts right now, they remain optimistic about the Broadcom's outlook for the rest of 2025. So citing ongoing AI infrastructure investment and the successful integration of VMware as key drivers for future growth. So very important for the company. And right here, you can confirm just the forecast, of this Wall Street analyst. We're talking about 33 analysts from Wall Street, and the average right now is plus 17% from current levels, and only the most pessimistic vision is just minus 3%, which is interesting, and the most optimistic one more than 46%. So for me, the key part, is like the EPS forecast as always, for EPS forecast and revenue, and then the net income. The EPS, the net income is related to the EPS because remember, guys, it's like earnings per share. It's like some sort of a formula that is including the net income, and so obviously it's a very important indicator. The net income obviously is at the end of the day is like, is it making money out of the business or not? Because I don't like this type of just revenue because that doesn't include that. It's like the net income is very important indicator because you can make a lot of money, but maybe you are not getting any money because you are, you have a lot of debt, or you are, actually in losses. So the net income is the best indicator to see the reality behind the truth. So obviously what we're watching right now is like, remember guys, the net income, and the net income right now is amazing. It's completely insane. We're talking about in January 2025, 5.50 billion. So it's insane. And the estimate right now, remember guys, the EPS 1.56. So you had to compare that before that, and we have like a 1.60, and before that 1.42. So essentially, after the news, we are expecting a very similar earnings to the last one. So that's actually very positive because the last one we made new highs, $250 per share. So according to that, we see that earnings. And I can tell you guys, if we see even a positive green factor, then we need a positive surprise factor. It could be even better, So 250, it could be feasible after the news, or even before the news, because they're already expecting that. And actually, it's just going too crazy. You can clearly see it's rolling. So right now we have the latest uptrend, which is completely insane. We're talking about like an uptrend of more than 44%. From just at the beginning of April. So that is just follow as well with the latest, developments of Donald Trump and the US tariffs, because right now it's like doing exactly the opposite of what he told. It's like he was going to impose all those tariffs, and right now I'm not so sure he's gonna do that. I'm not so sure at all. Probably he said that, to make new agreements. So that's probably the reason behind it. But obviously, if he continue with that, probably the stock market will continue to fall. who have continued to fall. So but it didn't happen because right now he's doing the opposite. He's just canceling everything he said. So that's very, very interesting, which is good for the markets, I suppose. And the thing right here is like we are nearly just 23% from the last highs. So remember, guys, we are expecting a very similar net income in comparison to previous levels. That's very positive, you know, for the stock. And actually, you buy the stock and you follow this pattern, you can get 23%. Those who bought the stock at the beginning of this, you know, of April, right now they could get like a 75% of performance, which is very, very good. Also, we are talking about a market cap of nearly $1 trillion, you know, which is insane. So in general, I would say the stock is in very good performance. We're gonna get like a very similar numbers to the previous one, maybe even better, with a better opportunity. Obviously, right now we are it's not the best opportunity ever in comparison to April, but anyway, it's still an opportunity. And this is my opinion, of course. Essentially, remember, read disclaimer again right here. And that's what I'm telling you guys. Remember, also we have a special discount for you trading view and also for trading 212 in case you trade the stocks. So thank you very much, guys. See you in the next video, and remember to subscribe to TraderSteve to watch more content like this.